Good afternoon, everybody. Welcome to the market close for, what is this, March 25th, 2024. Holy banana bread. We got another red day on the TSX, hence, of course, the red sign behind me. And we're closing out a pretty red week. We are definitely closing out a red week. Interestingly enough, the S&P 500 is in the green, not by much, but we just didn't even get close to that green today. We've been holding pretty steady in the red today. So let's, all right. Oh, perfect. I was just looking at something. We had a few technical difficulties last time. I think I have them all fixed. So let's first of all head on over, take a look at the charts. So we do have 0.33 in the red here on the TSX. You will notice we're still above our line though. As long as we stay above that line, we will have a green month. So that's fantastic. We only have 4 days next week before we're into November. So 4 days, hopefully. Oh, I was going to say it'd be nice to have 4 days of green, but there's a lot of worry going on about two things. One is tech. The other is that U.S. election. So we could see some more volatility next week. I still think we're going to end in the green. We might end closer to that line than I want. But you never know. Sometimes investors can be a little bit interesting. And we do have a lot of tech earnings coming out this week, coming up. So if those first earnings start to look good, that could completely change the story pretty darn fast. So looking here at the S&P 500, they're 0.06 in the green, pretty flat if you ask me. Nasdaq's actually holding pretty good, 0.69 in the green. Dow Jones 0.56 down. So those lower cap stocks not doing so great. Gold is in the green, up 0.29%. Silver's down 0.11. WTI having a pretty good day, up 1.87. Bitcoin down 1.81, and Ethereum also down 2.24. All right, let's get over to that heat map. And oh yeah, no, it's a red day, guys. If you guys remember on Wednesday, we sort of turned off all of the red, but it's back. So we can see quite a bit of red in here. Big losers, I guess, of the day. Yeah, Constellation Software down 1.42%. Bell is down 0.68%. Rogers is down 0.73%. Alimentation Couche-Tard down 0.76%. Loblaws 0.97%. Metro down 1.05%. And Dollarama down 1.16%. Definitely a lot of red in here. We do have some green, as you guys saw when we first came in. And Canadian Natural Resources, look at them, up 1.71%. Suncor's up 1.55%. So, yeah, we got some winners. We got some losers. Yeah, just not a great day on the market. It's not a great day in total. But if you were looking at energy had a great day. And, of course, you guys saw that oil was up. So, of course, energy had a pretty good day. Looking over here at the U.S., I seem to have lost my my ETFs. I don't know where that went. Well, we'll skip the ETFs today. Looking at the U.S., tech actually looking pretty strong. Like, look at this. NVIDIA up 1.1. Google up 1.5. Microsoft up 0.8. Meta's up. Tesla up 3%. And I think this is part of the story. Tesla being, yeah, it's hard. It's like, you think of Tesla as a car company, but they don't think of themselves as that. Elon has said Tesla's an AI company. So, depending on how you think of Tesla, that tech side of what they do, that the fact that they had the good earnings means that people are getting a little bit better, at least their opinions are getting better when it comes to how these tech earnings are going to play out in the coming week. So what does that mean? That means, of course, Nasdaq did better today than we could have hoped for. So you gotta like that. You definitely gotta like that. That's fantastic. Looking over at crypto, Holy banana bread. Look at this. Very red day. Bitcoin 1.68 down. Oh, Solana 4.99% down. So not the best day. Now, there were some winners. We're going to go into the winners here for a second. ApeCoin and Safe. These are part of those 14,000 coins that I just couldn't care about. But we're going to take a look at a coin I probably have never heard of before, hopefully. Calm. I guess keep calm and don't buy this coin. That's what I'm going to say. These are, I mean, look at this. You know, at one point, yeah, it was worth 17 cents. Now it's worth 2 cents. That's not a good return on your investment for sure. There are about 14,000 of these crap coins out there. Probably more than 14,000 to be honest. If you're going to invest in crypto, my opinion is stick with the ones that actually do something. You know, with your Bitcoins, your Ethereums, your Solana, your XRP. And if you're going to go into an altcoin that's perhaps not one of the more well-known ones, at the very least, read the white paper. Make sure you have some strong conviction in it. If it's just a coin for the sake of being a coin, you probably don't want to put your money on it for the sake of, oh my gosh, it might go up, because it may not. It may not go up at all. Oh boy. All right, I'm going to bring these crypto guys back in. Here we go. Here we go. And, all right, let's get back to the main screen for a moment. We will hit up those comments. We do have a bell in about 7.5 minutes. All right. I think I got the comment thing fixed too, by the way. So that's fantastic. Those of you who know that we were having some difficulty on the last live stream with the comments, and it turns out that there's 2 different modes I can be in. There is a live mode, and then there is this kind of a preview mode. And in the preview mode, nothing changes unless I hit publish. That's why we weren't getting our comments up. Now, I also put another thing on here as well. So each comment, when I bring it up, you guys know how I talk forever after a comment. Well, each comment will remove itself automatically after 1 minute. So, we'll see if I can get through a comment in a minute. The first comment, Jonathan saying, "Hold that bell. The weekend can't start without me." I hope you're here, Jonathan. I hope you're here. All right. And now we have Sarah's Abstract Boyfriend. This red week was a great buy the dip week, with the end of the year seeming to continue to bull run by what most analysts seem to be saying. Yeah, the end of the year coming up pretty strong. There's a lot of different things out there. Like I've seen people saying, "Oh my God, the market is primed to drop 26% at the end of this bull market." Well, yeah, maybe. I mean, you got to look at it this way. When you move, now this is why 26% is kind of a safe bet, right? When you move from a bull market into a bear market, you typically do go down. 26% is not that unreasonable for you to go down. And, we will have another bear market. There's no way ands ifs about it. The whole thing, though, is when are we going to have it? Are we going to have it soon? Now, typically a bull market, typically they last about 3 years. So this market began basically about, ooh, look at that, the comment went away. Sorry, I get excited over small things. This market began about a year ago in October. So we got a little ways to go. Doesn't mean, now, when we say typically a bull market goes 3 years, that doesn't mean that it's guaranteed. Some are going to be shorter, some are going to be longer. It's all going to come down to, if we stick the landings in Canada and the United States, then there's definitely more runway for this bull market for sure. So, and we'll continue to look at it. We'll continue to analyze it as we get closer, of course. All right. Let's see, Sarah's Abstract Boyfriend again. I'm in on it as well, only about 3% of my portfolio. I think I'm missing a comment. I might be missing a comment here that didn't come through. Oh gosh. All right. Let's switch over here. Let's see. I'm a tiny bit into BCE, like 2%, figuring they can't go much but up. I'm kind of in that same boat. I'm in that same boat with BCE. I do think that as the rate cuts get deeper and deeper, it is going to be good for the communication sector. So I see them as kind of a lagging recovery. But now that we've had this 50 basis points this week, I am looking, by end of year, I'm looking to see some movement on the upside for both TELUS, Bell, and Rogers too. Actually, in the news today, Rogers was looking at selling some of their, I can't remember exactly what it was. It was something to do with part of their access to some of the lines. But they're looking at selling off some of their assets just to help cover up some of that debt, to get themselves back on the right track. All right, we have Ed Vija. What do you think about Go Easy, GSY? The earnings are in on the 7th of November. I am scared because I am not a professional yet, because it represents 7.5% of my portfolio. Okay, that's a good amount. That's a good amount. I will tell you myself, when it comes to my portfolio and my exposure to any one company, I try to keep it to 5%. Unless it's a company like, for example, BAM. So Brookfield Asset Management, they manage a whole bunch of companies. They're almost like an ETF in that way. For a company like that manages multiple companies, I will allow them to get up to a 10% stake. But no more than 10% or 5%. They will, if I have a single company, it does sometimes drift up value-wise across 5%. And then I'll have to decide how I'm going to rebalance that at a later date. But the good thing is, Ed, you found this channel, and hopefully, after watching some videos and checking out some live streams and asking questions, hopefully you'll begin to feel a little bit better. GSY, not sure what their earnings are looking like. I haven't really dug deep into them, but they've been doing really well this year, so I don't anticipate their earnings to be too bad. They could very well meet or beat expectations, so they could be good. All right. Ed says, I sold TIXT, so that's TELUS International, with negative 75%. At least it was not a high rate in my portfolio. No more than 5. So did you take a 75% loss on that? Ooh, yeah, that's not good. That's definitely not good at all. With something like, the problem is, and this is, I guess, the problem with TELUS. I just don't like that you took such a huge loss on that. I probably would have held out personally, but because TELUS is doing okay, and because they're a communication, I mentioned earlier, those rate cuts, they're going to be very good for that sector. They're coming to the game a little late because they do have a lot of debt. But I do think we're going to see a little bit of recovery there. So I wish you hadn't sold out and took a 75% loss, though, for sure. All right. Sarah says, I can't believe I finally did it, but with all the whale activity on Bitcoin, I finally drank the punch. So you bought some Bitcoin. Good for you. Let's see. Figuring though they say inflation is down, I don't know anyone that isn't still feeling the squeeze still. Until things become more affordable, I don't see them suffering any. Keep in mind, with inflation being down, guys, it doesn't mean that prices are going down. For prices to go down, you would be looking at deflation. And that's something we don't want, because deflation is very, very bad for the economy. So what this means right now is inflation, of course, this week, the CPI came out and it was 1.6. So that was the end of last week. It was 1.6. That's where inflation is sitting at. So that just means that things are still getting more expensive, but they're not getting expensive really fast. So, and that's a good thing. And that is a good thing for the economy. Now obviously you will see other factors that will affect prices. So, for example, if you have a product that nobody wants anymore, that price will go down because people will be stuck with excess inventory. Or if you have, I'll give you a great example of prices that do go down. Newer electronics. So when new tech comes out, they are crazy expensive. But as more and more people adopt and get into that tech, the prices do come down. Everything from like mass production, there's a lot of things that will drive prices down. But also keep in mind as well, with oil currently being lower, that is certainly helping with prices as well. Now, keep in mind, some retailers don't always pass on savings to you because, if gas goes down for a while, that extra profit, because they're not paying as much to get some of their products, sometimes that just means that they just take that little bit of extra themselves and it doesn't really pass on. But there are also retailers out there that will give the savings on to you as well, or that don't change the price but have a sale instead, as a way to sort of give you incentive to buy things. So, you gotta love it. You gotta love it. Let's see. Never heard of TIXT. Sounds like it's best I didn't. So yeah, TIXT is TELUS International. So that's pretty much, it's, because it's TELUS, a lot of people definitely like it. I did do a deep dive on it. So if you want to know a little bit more about it, just do a search on it. There is a deep dive on it. Let's see. Part FOMO, I'll admit, but I've been on the fence about it for a while now. That's the thing. And this is one of those things that new investors are always dealing with. FOMO, so the fear of missing out, and of course FUD, fear, uncertainty, and doubt. So you always want to try to not let things like FOMO, influence your buying. Like a lot of times where you'll see FOMO is when a price is rising like crazy. You're looking at it and you're like, oh my God, look at it. It's going up, 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 up. And you just want to jump in because you don't want to miss out. So that, you have that fear of missing out. So many times investors will do that. And almost to the second they hit buy, the price stops moving up and it turns around. It happens. You'd be surprised how many times that happens to poor people. And then as it's going down, you're like, I missed the top. Oh no, it's going to go to zero. What am I going to do? I'm going to sell. And you sell. So you ended up buying high and selling low. And guess what? That whole Murphy's Law thing, as it was started to fall, you went and sold and it turned around and it went back up. And if you would have just left things alone, you could have been in profit by the end of the day. But instead, you just created a loss. So that's kind of those things that happen. That's one of the reasons why dollar cost averaging, it's one of the, oh my God, it's bell time. There we go. I can't believe I'm late on the bell. I can't believe it. I should be ashamed of myself. Holy cow. It's because tangents, right? Tangents. That's my worst enemy, is them stupid tangents. They take me off. Okay. What I was saying, though, is that's one of the reasons dollar cost averaging is such an effective way to buy. So if you're a long-term investor and you're, especially if you're young and you got a big, long horizon in front of you, if you just sit back and dollar cost average into, your conviction stocks, you're going to do really well. You will absolutely do well. If you're trying to time that market all the time, you're going to lose money. It just absolutely happens that way. All right. Jordan is in the house. Hello, Jordan. Good to see you. All right. Always love to see Jordan. Let's see. Happy Friday, everyone. Ed says, about Starbucks. Looks expensive, but keep. Starbucks is not a bad company. And it's one of those things. If you have high conviction with Starbucks, yeah, sure. There's nothing wrong with holding them. I don't think they're going to go anywhere. But at the same time, it's one of these things where you have to decide what you have high conviction in. And generally, you also want to have a strategy on how you're going to deal with ups and downs in the market. Because if you're just sort of reacting, if you're a reactor and you're just reacting to the market, you're probably going to lose money. So you don't want to be a reactor. You want to have a plan in place. Okay, I'm going to buy, let's say with Starbucks, you're like, okay, well, I'm going to put $100 into Starbucks every month on the 15th. Great. You stick to that. You can have a strategy to say, okay, if this happens, I'll take a certain amount of profits. So for example, let's say you're saying, okay, if they hit this level in price, I want to take some profits. You can certainly do that. You don't have to take, and this is one of these things, it's not a take, sort of an all or nothing. So when a stock is going up, if you have high conviction in that stock, sometimes you're like, I just want some of those profits. Sure, take some. You don't have to take them all. You could take a little bit. It never hurts. I mean, it never hurts taking profits off of the table, but you just want to be careful as you're going up with what you're doing. I mean, you don't want to sort of overthink, and that's why sometimes having a plan and having a general idea or a concept. For example, if let's look at the Air Canada. So, and I'm going to bring this up here. Let me pull this up. All right, I have to bring the other one over. There we go. All right, let's get over to Air Canada here. Give me a second. All right, here we go. This is where I want to be. Oh, I was just playing with that the other day. All right, let's go to Air Canada. All right, they're making changes over on TMX. So, and I'm not liking some of them. Like, I don't like this. I liked it going right across the screen. I don't particularly like having the 7-day events there. It's annoying me a little bit. But all right, we're going to go here to the 1 year on Air Canada. Actually, let's just go to the 6 months because I want to be able to see it a little bit better. Okay, so with Air Canada, I did this play in the 0 to 100K challenge. And what it is I looked at Air Canada, and there's got to be a way I can make that full screen. What if I double click on it? No. Holy banana bread. All right, I got to live with the fact it's not full screen anymore, but let us go to, all right, we're at the 6. Actually, I need to go out to the year for a moment. Actually, let's go out to the 5 year. All right, so what I want to sort of explain is this is where Air Canada was before the pandemic. And this, of course, is March 2022 right in here. There's their pandemic drop. Now, they fell really far. One of the things you have to realize is as they were suffering down here, they diluted their shares. So dilution is when you print. Basically, you're printing extra shares. So your outstanding shares number goes up. So as a result, your market cap stays the same, but you've printed more shares. So that means that when you do the division, your share price goes down. So they were printing shares. So their dilution has come down. So going back up to, $50, probably not going to happen for a very, very long time. But as they started to get a little bit of recovery here in the pandemic, they did hit this level in here. So basically from about 20 up to 28, but they were hanging out in that area for the longest time. And so I do see that as an area that Air Canada can definitely get to. So the plan is that when it was struggling back in here, I was looking at it, okay, well, look, I was like, if it goes below 16, I'm buying. So that's what I did in the challenge. I bought for every month in here when it was below $16, I added shares. And the goal was, I know it's reasonable for it to get back up to 20, maybe a little higher. But I'm like, okay, I'll buy under 16. And then when this gets to 20, I'm going to sell. So right now it's sitting at $18.92. Now I'm going to come in a little bit closer. Let's go into this 1 month. It actually got at one point to $19.16, and now it's retraced and it's coming back up again. Now Air Canada does have earnings this coming week, so that could be really interesting to see what happens. So I might be getting out of this trade much sooner than I anticipated, because I'll tell you, when I set this up, I was thinking that $20, I was thinking I wasn't going to see it until 2025, maybe towards the end of the first quarter or early in the second quarter. But it's just been it's been taking off. No pun intended, but woo, up it goes. So Air Canada doing fantastic. So that's just kind of, but that's a whole thing. I say this because that's the whole idea of a plan. So keep a plan in place, and these type of things will definitely happen. All right, I'm really far behind in the chat. Let's zip through some folks here. Mario's in the house. Good afternoon, Mario. We got Missy. Hello, Missy. Whoops. There we go. Hello, Missy. Good to see you. JJ is in the house with a double hello. All right. And Sarah's saying hi, everyone. Chad is saying, good day, all. Tesla made a good comeback. They sure did. They sure did. They absolutely blew. They blew the revenue out. And the ironic thing about that is that all this money that they actually received, most of it actually came from selling credits. So they were selling basically carbon credits to other car manufacturers who, produce gasoline engines, because they needed the credits to basically not get into trouble with the regulator. So they were selling credits. That really, really pumped up their income. All right, Enid is in the house. Hello, everyone, and those of you who were here yesterday. Enid just got back from vacation, so not too shabby. Niece is back. Hello, Niece. Always good to see you. Missy says, my son just started investing today. I hope he catches the bug. In school, is he like learning about investing, or is he actually investing? That'd be cool. JJMA says, any thoughts on copper like tech and First Quantum? I do like copper. I do like copper. I think Mara is another one that I've liked in the past. Copper is one of those ones where you want to pay attention to what's happening with, for example, batteries, and what kind of demand is still there. Now, copper right now, I think the demand is pretty big. I mean, as it is, if you're building a house, you pretty much need a security guard. Otherwise, thieves will come in and steal all the copper wiring. So copper is definitely still in demand. Now, I have my thing up. So let's take a look at we'll look at the first one. You said tech. All right, here we go. So tech resources, bringing them on up here. All right, let's look at their 1 year. So you can see, they have done well. A year ago they were sitting at $50.24. They're up at $66.37. But you will get volatility. It's a commodity. Commodities come with that volatility. But I think copper is not a bad thing. Now let's just take a look at their key data here. All right. Now their return on equity, not super high, 5.54%. Return on assets is fine. They don't have a lot of debt, 44% debt to equity ratio, so it's not too shabby. All right, let's take a look at the other one now that just to see if I like it better. All right, First Quantum. There we go. First Quantum Minerals. Here we go. All right, and we'll look once again. We'll go to the year. So yeah, this is a similar thing. The volatility is still there. Let's go into their data. All right. Ooh, boy. Now, this one's a bit different. Like, they have a bit more debt, so 56%, but they're not currently profitable. We've got a negative debt to equity ratio, return on equity is negative. Also, the return on assets. So, if I were to look at between the two of them, I would gravitate much more to tech than I would to First Quantum for that reason. All right. And Chad, this does not surprise me. Chad says copper always good in my opinion. And Chad has a healthy appreciation for commodities for sure. All right, Tom says, loved your video on RioCan, as I've been looking at adding some. Unfortunately, I don't have room in my regular account. Do you think it's still a good option in a non-registered account? It's still a good option. You're still going to get all of that growth. Fantastic. However, you just have to be prepared that every dividend you get is 100% taxable. So you don't get any tax savings at all on a REIT. So you will be taxed on the dividend. But if you're looking to ride up that growth, then yeah, that's, you have to sort of weigh that against it, but not too shabby. All right. Vic says, hi, heading out on the road, so may listen but can't type. Okay. All right. Drive safe, Vic. Although, Vic drives his big truck, so One thing I know is that a lot of truck drivers tend to be really good drivers, for sure. Nine says, I only buy Bitcoin for crypto. I don't even trust Ethereum. Okay, that's fair enough. And that's fair enough. And this is the thing. I always say, stick to the coins that you know, stick to the coins that make sense to you. And in this case here, there's nothing wrong with saying, I'll buy Bitcoin, but that's it. Nothing wrong with that at all. All right. Oh, yeah, keep calm and crypto on. This shows me how far behind I am in the comments. So, fantastic. Burger says, picked up a bunch of CLCO, the cool company, 8K shares. I've been buying this all year, taking a free 80 cents, 10S into the mid 11 cents. Okay. Or sorry, $11. 11s. I saw the S and I just went cents. But no, that's fantastic. Roku says, good Friday afternoon. Comments look great. Yes, I figured out a whole bunch of things. I actually went into a live chat with Ecamm today, and I asked a few of my questions. I'm like, okay, this is what's happening. Why? And they're like, yeah, you're in preview mode. I'm like, oh, darn. Okay. So yeah, fun. Comments are nice and easy to read now. Yeah, absolutely. Plus, I also discovered that the little thing where I'm reading the comments, I was able to make it bigger so I can actually see this add to broadcast button a lot easier. So it's completely much easier. JJ says, I like the comment background change, much easier to read and follow along with. I don't even know if there was. I didn't actually change the background to the comment. I think it's just because I'm now doing it in the proper mode. I think that's making a huge difference. All right. Yeah, and JJ wants to know how old your son is. Missy, make sure he starts nice and early. Yeah, that's absolutely there. 9 says, a good old Black Swan event may give you that deflation. Well, that's a possibility too. That is a possibility. There's, there are things that can certainly happen. Let's see. GSY is what I was talking about with Ed. Oh, right. Okay. Perfect. Now we get it. Let's see. 4 minutes late. I know. Air Canada hit some turbulence, but the oxygen mask didn't come down. No oxygen needed. Yes. This is my shame. I was 3 and almost 4 minutes late on the bell. I feel bad. I've been so good at not missing the bell all in the last while, but yeah, today I absolutely fell. Isaac, I think you're new. I don't recall seeing you before. Welcome to the stream. What are your thoughts on EV? I have ChargePoint holdings, but it's down 75%. I love EV. I mean, I do. However, I love the product. I think it's a good product. I think the problem is a lot of countries have put unrealistic expectations on how fast we're going to move over to EV. And a lot of it, if we take Canada, for example, our infrastructure, like our electric infrastructure, is not ready for these targets yet. So there's still a lot of work that needs to be done. I also think right now we're at a situation where you also have issues with, for example, there's not enough charging stations out there. Yeah, that to me, that causes a little bit of an issue when we're looking at EV. So, is it going to be the future? Yeah, absolutely, 100%. Are we there yet? Perhaps not. Now, when it does come to investing, though, I would be more inclined, instead of going directly for EV, I would be more inclined to be looking at some of those critical minerals. Like, for example, your copper, for example, your lithium, for example, your gold and silver. I would probably focus more on that than perhaps, or if you're looking, you can look at Tesla if you really, because Tesla is one of these companies that, at least share-wise, no matter how much they fall, no matter how bad things get for Tesla, they bounce back. And that's kind of that just the way, I mean, that's been the history of Tesla. Maybe a day will come where they won't bounce back, but I don't see that happening. So that might be another area to sort of look at. So just sort of, whatever you do your due diligence in what you're looking at. So something like ChargePoint Holdings being down 75%, that's a little bit scary. It's a little bit scary. And sometimes, depending on the companies, especially some of the smaller EV startups, you want to be very, very careful for sure. All right. A 9 said Air Canada printed 20 million shares during 2020. I don't know what the exact number is, but they did a good amount of printing. They had a lot of dilution for sure. It could have been 20 million. I honestly don't actually know the exact number though. Muggsy says, "Happy Friday, everybody. Holy smokes, does anyone remember NDA? Neptune Digital Assets, if I remember correctly. I'm thinking something happened to NDA. Let's take a look here. Now, NDA, they were one of these companies that, look at this. Yeah, they had a big, they went from 36, so they doubled in price in... since 3 p.m. today. Well, that's amazing. Yeah, they doubled in price. So what's going on with Neptune Digital Assets? I don't know. I mean, it is a penny stock, but back in the day, one of the most attractive features of this stock, because I know that back in the day of Hirai, he used to promote this stock quite a bit. They had a lot of potential. Like they had almost no debt at one point. I don't know if they're still in that situation. Let's find out. Debt to equity. Yeah, they're still sitting without debt, and they're still unprofitable at this moment. But maybe that's about to change if something has happened. I don't know what happened to them, but yeah, that's not a bad jump at all. Not a bad jump at all. Yeah, exactly. Yeah, Neptune Digital Assets. All right. I love BHP as a copper name. Only thing I don't like is an Australian name, and the people there are very far left and tax. Yeah, that can definitely happen. Let's see. Anyone else in on QQC.F? Oh, I like how you put in your dot. Let's take a look at this one here. QQC, and this is .F. All right, here we go. So this is the Investo NASDAQ 100 Index ETF. So this is going to move very close to what the NASDAQ does. So if we come back to the last year, you can see every little hiccup the NASDAQ has, but look at this. A year ago, $115. Now it's $161. So not too shabby. If you're looking for, and there's more versions of this. Like this is the F one. So for example, the F, you might be like, oh my God, that's a lot. I don't want to pay that much to get in. Oops, there's 3 Qs. Q. Or no, there's not 3 Qs. QQC. There we go. You can get into a cheaper version as well. This one here, 3361. But the same idea. When you look at the 1 year, you're going to see pretty much the same thing on it. So yeah, it's not too shabby. It's kind of this whole thing. You can pick almost any NASDAQ ETF out there, and you're going to get a very similar shape. So that's kind of cool there. All right. Ed says, let's add this here. Maybe there is room for one more company. I found this small cap last week. Looks promising. I wanted to share it here. Elix. Oh boy. Let's take a look here. ELIX. I have never heard of this company. I will tell you that right now. Yeah, I don't even have access to it on this one. That makes me think. Let's give me a second here. Let's go to Yahoo. Now, is this a U.S. company, Ed? I'm thinking it might be. ELIX. Here we go. Well, let's just see. ELIX. Yeah, I'm not even finding this company at all. Yeah, I don't know. I don't know enough to say it. What I will say, so Elixir International. Well, here's an Elixir International PLC right here, but it's coming up as 54K.F. Here's another one, Elixir International ELXXF. Let's take a look at that one. Okay, well, I've got no data on this one. It is, I mean, it's a small company. You got to be a little bit more careful with some of these smaller companies. I don't know here. Like, I'm going into some statistics, but I honestly don't know if this is the one that you're absolutely looking at. All right, let's see here. Total debt to equity, 3.90%. Okay, they don't have a lot of debt. That's fine. Yeah, I mean, you still have to be careful because when you're dealing with some ultra small caps, now this one appears to not be a penny stock per se. I'd call it, I don't even know if I'd call it penny adjacent, but always look at it this way. When you have a stock that is not what you would consider blue chip, you want to make sure that you cross your T's, dot your I's in your due diligence, and pay attention to it. So if you're holding a company like this, this is one you want to watch. You want to see what's going on with it. Have an exit strategy 100% if you are looking at a more risky company, because, if things go wrong, you don't want to overreact, or you also don't want to underreact. So that's kind of that nice little thing with this. So I'm not 100% sure if this is the one that you're looking at, this 838 one. But obviously, if you have a hard time finding it on most, on most things, like if you can't find it on Yahoo Finance or TMX, it makes me a little bit concerned about it just right away. All right, Tom says, I'm going to park some cash in NY. Is the best time to buy right after they pay out their dividend. Wealthsimple has dropped their cash rate to 3.75. All right, so we'll go to MNY here. Give me a sec here. Let's, why do I have so many things open here? Let's see here. X. Ecamm Live. All right, there we go. Bang, bang, bang. All right, there we go. All right, so Tom, MNY. Let's pull this up here. So Purpose Cash Management Fund. Now you will see, and let's just pull up the last 6 months. Here you're going to see these are what we call cash ETFs. So they're a place you can actually park cash. Now, what's nice about them is that you'll see down here you have a distribution almost 5%, so 4.943%. But their price is very, very predictable. So in this case here, their base price is about $100. So 100, you can see right here, around 100.01. So maybe 100 and a penny. But that is on your ex-dividend day. And through the month, they will go up and they'll get up to about 136. So if you're asking where should I invest, obviously, ex-dividend day is when it's going to be the lowest. That would be the best time to put your money in. Because then, here's the beautiful thing. If you're putting money in this and you're parking that money that you're going to eventually buy, if you run into an opportunity halfway through the month, well, you've just turned that $100.01 into $100.20 for each of them. So, you get a little bit there. But at the same time, if you don't do it in a month, you do get that dividend every month as well that's going to add on. So, yeah, I mean, if you're looking for the most cash best place to buy, right there on ex-dividend day, absolutely best place to go. All right, whoops. George, I don't know if George, I don't think you've spoke up here before, George, but well, you say you have. A while back I mentioned Kraken. I got in at 1.45. Just curious if you did more research on it. It has been performing great. Kraken, I have not. I will admit. Let me just take a look here. Is that a stock, or is that a crypto? No, Kraken right here. Kraken. Are we talking Kraken Robotics? Is that what you were talking about? Because this kind of rings a bell here. Like I do. Yeah, this is probably it. Look at this, 182, and you get in at 145. So you get in down in You get in before here. Let's see. Let's go to month. All right, so you got in around 140. I don't know where you got in. Somewhere's even further back, I think. Okay, there we go. So you got in somewhere's back here, but they have been doing good. Fantastic. These are kind of a lot of these little stocks that are either AI or robotic related. Some of them are going to do really, really well. Some of them are going to have, yeah, they're going to really do bad. And right now, this one does seem to be moving in the right direction. I do love that. They are profitable, like they do have an EPS, which is fantastic. All right, let's go into our key data here. Debt to equity ratio, 51%. Not too bad. I do love they have a nice return on equity, though, 19.91%. So I do like some of the things I say. Now, this is still, to me, it's still a penny stock, but it's one of those penny stocks that is a little bit smarter. Like if you have to pick a penny stock, this would be in that group that I would pick from. I don't think, there are some that you can look at the fundamentals and they'll make you go screaming like like somebody who got too scared on Halloween. But this one, yeah, this one's not too shabby. So it's not bad. It's not bad. Oh, very, very good. But yeah, you're right. It has been performing definitely great. But once again, because it is a penny stock, keep your eyes on it. Have an exit strategy, as I mentioned just a moment ago. But hopefully, and I hope this is one of these stocks that a year from now I look at it again and you say, Candace, you remember that stock? And I'll be like, yeah, gosh, I sure wish I had gotten in on that. That's a possibility. But I might also be a situation where you could be coming back to me in 3 months and say, yeah, it tanked. It could happen as well. I hope it doesn't, though. I do think there's a lot of opportunity in that sector. And I love a success story. I absolutely do. All right. Let's see. That's what GPT said for Air Canada share dilution. Don't know if that is true. Honestly, once again, I don't know. But I mean, I find ChatGPT is getting better with their information, so it could be right. All right, a Dollarama updates. No, I don't really have any big updates on Dollarama at the moment, but I do still like Dollarama. Oh, I did make a change. I did make a change to the comments. I just remembered it now. I think now the text sizes itself. So if you only say something small, it comes up much bigger. Where if you type out a whole little novel, it gets much smaller. But that's kind of cool. But yeah, Dollarama. It's one of those ones I'd love to do a deep dive on again sooner than later. But obviously, that's up to you guys if I do that deep dive on it, because you guys all get to vote on the deep dives. So you guys, that's all in your up to you guys what we do for deep dives. All right. Off the road. I hope that means you pulled over, Vic. I hope that means you pulled over, because I just said you were a good driver. I just want to put that out there. All right. Vic said bought 2K shares of Alimentation Couche-Tard at close yesterday, but now down. Pray for me to swing out in the green. I'm hoping. All right. Vineet has joined the building. Hello, Vineet. Good to see you. And Vic is mentioning, Vineet, I've seen all of your videos. Yes, so Vineet has started a YouTube channel. So, yeah, absolutely. It's like, I can do this. I think I can find it faster this time, guys. I'm pretty sure I can find it faster. Let's do it. Let's see. Oh, here it is right here. I still have it up from the other day. I'll link it right here. So this here is Vineet's channel. If anybody feels like checking it out, there we go. Perfect. All right. Let's see here. All right. Yeah, and Vineet says, thanks, Vic, for all the support. Chad says, is that not always the case below 52-week low today? At close, it will recover. Right. I think Chad's talking about alimentation couche-tard. Let's see. Under the live section, I have videos there too. Assume you saw them. All right. XEG. Yeah, I love XEG. XEG is one of my favorites. So let's go back. I'll show you guys XEG. I mean, when you look at it, you'll be like, oh, well, it doesn't look that impressive. But it really depends on what oil is doing. Like you can see oil had a good day right there. But let's come back out to the year. So actually, let's even go to the 3-year just so you can get an idea. So XEG, it is the iShares S&P Capped Energy Index. Sorry, S&P TSX, which basically when you see it written that way, guys, that means it's the TSX. That doesn't mean that you get the S&P 500 in there. The S&P/TSX is the TSX. All right, so... yeah, like look at this. They've gone from 1054, this is 3 years ago, up to 1801. So this does move really, really well with the price of oil. You will notice, so you don't get a huge dividend, like it's about a 3%, so 2.974 quarterly dividend. But this one, you're mostly in it for the growth. So it is a great exposure to energy, especially if you don't want to buy individual companies. So... and if you don't want to get into like covered calls. So if you're comfortable with covered calls and leverage, you could look at something like ENCL. We'll pull that up here. All right. You notice how that looks very similar? and no doubt. But look at them we can't even do 3 years with them because they've only been around for a bit. But yeah, so this one here, because it has leverage, it will move bigger than, for example, oh, well, you know what? Let's look at the other one. Let's look at ENCE. All right, so this here is the covered call version without the leverage. See that same shape? So once again, you can tell if you see the same shape across a whole bunch of ETFs in the same sector, then it's a sector thing that's happening here. But we'll go to the 3-year on this one. They had this one peak, but it doesn't look as impressive as XEG. That's simply because you are getting a lot of dividends here. You're getting like 13.793%, and that's a monthly dividend. So you're getting this heavy. You're basically 13 cents a share. So you're losing some of that upward potential. You're losing some. Guys. We got to do it. Where the heck is it? Seriously? Where's my my thing here? Why don't I... Oh, this is annoying me. Uh-oh. Oh, I do not know what just happened. That's just weird. I must have hit something. All right, let's get back to TMX. All right, we will go ENCC. This might only be on stocks. Maybe it isn't on ETFs. Yeah, because I'm not getting that extra thing that's up here. So, for example, I'll show you guys anyway. I'll show you guys because this is fun. Let's go to, we're going to go to BNC, BNS. We'll go to Bank of Nova Scotia. There we go. I got the technical insights now. All right, so with Bank of Nova Scotia, I can go to the technical insights. Now, I am going to change this. We'll go to, we're going to go to the year, 1 year. And we're going to compare them. First of all, I'm going to change this to just a straight line, just to make it easy. So this here is basically, this is price, I believe. Yeah, 70, look at that. All right, I'm going to let's add BMO. All right, BMO, here we go. Bank of Montreal. All right, now this is your total return. So this is giving you a general idea of that total return from this, and this is the 1 year. So the BMO is at 23.36. The Scotiabank is at 28.16%. So it shows you. Now we can put in another bank. Let's add, we'll add TD. All right, there we go. Can you tell who's had some serious problems this year? Look at this. TD is down here at 1.44%. Holy banana bread. But yeah, you can see they've had some serious problems. We'll add one more. National Bank has been having a pretty good year. Let's add National Bank here. There we go. And look at this. All right, guys, let's come up. Now you can see we're comparing 4 banks. We got National Bank all the way up here at the top at 50.77. Now, I know if I stop here, guys, there will be somebody who's like, well, what about CIBC or what about Royal Bank? Let's add Royal Bank. Here's a Royal Bank. All right, and I'm gonna add what is it? CM. There we go. So now we got all 6. Holy banana bread. Let's take a look here. So we got up at the top. We got the 79.1 right here. And you can sort of see what we're looking here at is, let's see if I can pull it in here. So when we're looking at this, you'll see right now, CIBC is at the top with 79.01% in the last year. And you can see they all pretty much started pretty darn close at the beginning of the year. And it's just been growing. Now, this graph is a graph of the total return. I want to keep that in mind. So, their stock price will not necessarily look the exact same as this. This is just their total return. So that's why they all start at that pretty darn close to 0, because that's where we're going. But you can see from here, here's the difference. TD at the bottom, CIBC up here at the top. So not too shabby. And then you've got, a few more stragglers and then a couple here towards the bottom. But this is a really great tool. I'm looking forward to it. Like, I will use this when we do every quarter. We do a bank video where we compare the banks. So this is going to be a new graphic for that bank video. So I'm pretty cool with that one. All right. All right, let's get to Paul. Let's see. Hello, on lunch at work. Yesterday got 3,196 shares of HODL, so HODL, at $1.40 at 11 a.m. Post sold at $1.70. That's not too shabby. And then took your proceeds back into BTCC.B at a lower price for, that's cool. I mean, this was a good move that Paul made. A little bit, one of these moves that would scare me a little bit. I'll show you HODL, HODL. Here we are. So this here is Soul Strategies, but look at it now. Look at it now. It's up to $1.81. So maybe Paul could have got a little bit more. But I mean, and I'm going to come back to the 1 month. Now let's go to 3 months. And you can sort of see it had this little bit of an explosion here. So, this here is a crypto related stock. So, nothing wrong with that. Nothing wrong with that. Other than, this is the type of stock that would scare me because it's a penny stock. It's also crypto. Volatility can go in either direction. So you got to be a little bit careful with these type of stocks. But Paul made a good play. Anytime you walk away with a nice sized profit, and just keep in mind, you're looking at 3,196 shares. Each one of those made 30 cents. So that's almost $1,000 of profit, almost $1,000. So that's not too shabby at all. All right. PNG cracking on a tear lately. Yeah, exactly. We did. I think we looked at that, or maybe we didn't. Paul says this morning up to 190. Yeah. All the fun stuff. Vineet says, thanks for sharing the link to my new YouTube channel, Candace. No problem. You get a couple free ones. After a while, I'll stop sharing it though. Then you'll have to pick up your own momentum at that point. But keep putting the content out, and you'll grow. I have no doubt. Muggsy says, sorry, Chad, I had to take a phone. Yes, Neptune Digital Assets. Yeah, absolutely. All that fun. All right. Did we? I don't even know if we looked at PNG. Let's see here. Yeah, I couldn't find it, I think. Oh no, we did look. Kraken Robotics. There we go. The funny thing is, every time I hear Kraken, I think of the Kraken exchange. I used to use the Kraken exchange, which is a crypto exchange. That's where I used to hold my Polkadot back in the day. So when I hear that, that's what I think of. That's what I think of. Fun. A 9 says, yes, now I hold ENCC, ENCL, and XEG. I'm bullish on energy long term. Yeah. Yeah, I'm pretty bullish on energy, energy long term as well. So always good. Paul says, Kenny Rogers, you got to know when to hold, or sorry, know when to fold them. We need to know when to hold them as well. So I think that's the other part of the song, but not too shabby, not too shabby. Oh boy, this has been another great stream. If you got your last minute questions, drop them in. Doesn't mean that we're done yet. Like I said, I know last time there was pretty much not really much questions, so we ended a little bit earlier than normal. But if you guys got the questions, I've got I got the answers, or unless you ask something that's absolutely left field, I may not have an answer for. But if I don't have an answer, I'll tell you. Ooh, and you know what I haven't said yet today? And it's not my fault. It's Mary. Mary's not here. So be sure, guys, if you have not yet hit that like button. Like right now I can see 24 likes. So slam the like button, because it does help the algorithm. And that basically helps push this out to more people. One of my goals this month is basically to put the channel in overdrive through October. And we've been doing really, really well. I gotta say, for example, all of the videos this month, except for the that penny stock deep dive, have broken 1,000 views. So that's not too shabby. Loving it, and we're on the verge of breaking some records for the month. I like that too. So we'll keep it going, and I'm going to keep that momentum that you guys have created. I'm going to keep that going into November. December is going to be absolutely bonkers, I think. December, holy banana bread. We are doing our financial Blogmas. So it's going to be a bunch of these little, I don't know, I have no clue how long they're going to go. Some will probably go longer than I intend. But they're going to be little live streams where I'm going to just be out and about, or we're going to try to break the traditional stuff, and maybe once we get the tree up, I'll have some where I'm in front of the tree and things like that. But that's coming up in December. We're going to do one of those every day from the 1st of December to the 24th. And in addition to that, all of the other stuff that I normally do will also happen. So it's not taking away, it's just extra content. So it'll be fun. It'll be fun. All right. Michael says, look at how cheap REI is with a low PE and beat earnings the last 2 quarters and trades at 150. All right. REI. Let's take a gander here. So REI, of course, as you guys know, is a RioCan Real Estate Trust. So those of you who have not yet watched today's video, it's a deep dive. It's a deep dive on this company right here. So definitely check it out. Now, I'm just going to come back to the 6 months. And you guys can see here, since the beginning of the rate hikes. So the rate hikes began in June. So from June, they've been on a tear. And there's been a little bit of a correction here. That's fine. Keep in mind, we just had another giant rate cut. So another 50 basis points. So we are going to see more movement on this. And if you're curious to know where they might be going, let's go to their 10-year, because you can see this better. So this is where this REIT normally hangs out, up here around $25. That is where we're going. So you can see we fell down in the pandemic. We almost made it back up, but then bear market, aggressive rate hikes, and now we're on the way back into recovery. So we're going to see this more than likely. I'm I think there's no reason why we can't even get up to as high as 30 on this one. So we got a lot of room to grow, and I am absolutely very bullish on most REITs. There are some REITs that I would tell you to stay away from, and I will show you one right now. Slate Office REIT. Let's take a look and see how they've done with the rate cuts. For the most part, not a lot. They have recovered a little. They have picked up a little bit. Like they're sitting at 65 cents. And you might be looking at that saying, oh, well, that's not so bad, Candace. What's wrong with that? Oh, boy. Let's go take a look at where they were. They were up here at about 6. So they've fallen big time. And if we pull out the 10-year, you can sort of see here, we have not seen that recovery on here. Now, they do have a lot of natural gas. I was just seeing what Michael was saying. So I'm looking at the wrong REIT, the wrong REI. There's probably a US one. We'll take a look at that in a second, Michael. This is just one that hasn't really recovered that well, mostly because they're holding a lot of office properties. It's going to take, as people, though, do come back to work, there may be a bit of recovery for this one. But this one, to me, is a little bit just too risky right now. I would stick to the REITs that are already showing you what they're doing. Or you could stick with, for example, a ETF. All right, now, Michael was actually talking about REIUS. Ring Energy right here. Okay. I'm still excited about RioCan, but this is Ring Energy. So, first of all, let's come in here. Where are my... why is it not giving me... Oh, here it is. All right. So, they're profitable. I like that. That's the first thing I like to look and see. Okay, they are making a profit. Fantastic. They do not have a dividend. All right. So, and this one here, I'll also like to quickly see what they're doing. So we already know Michael mentioned that they were natural gas. So let's see, oil and gas exploration production based in Midland, Texas. All right, development of oil and natural gas fields. Perfect. Okay, so they're in the natural gas, so oil and gas. I love it. I'm a big fan of that sector. All right, let's take a look and see what we got down here. All right, their debt. They've got a 50% debt to equity ratio. Not too bad. You know, if oil does well, I would love to see them knock that down a bit, which would be great. Return on equity, 9.16. Not bad for a company of that size. 5.34 return on assets. That's great. So I like the information I see. But, of course, they are a penny stock. We still, you may say, oh, but it's $1.51. Yeah, it's still, to me, that's still a penny stock. They're probably on the verge of becoming a penny adjacent stock. But that just means that if you're going to hold it, if you're going to take a chance with them, you want to pay attention to what's happening. You want to have an exit strategy, and hopefully you don't have to. This is a good sector, and this is a penny stock that has some potential. I like what I've seen fundamentally. So when I said if I'm going to pick a penny stock, I'm going to pick it from a small pool of fundamentally positive stocks, and this would be absolutely in that pool. So not too shabby on that. All right. Roku says buy an ENCL at the wrong time will make you happy or grumpy many times in a week. Yeah, and that's the thing. When you do have that leverage, you got to remember, yeah, you're going up fast, but you're coming down fast too. So it works in both directions. So if you're a person, and this is what I say, if you're a person who, gives in to FOMO and FUD, then a leverage stock is probably not for you. The covered call would probably be better for you, or even just going to something like an XEG would probably be better for you in that case. Roku has a lot of experience. So Roku's been around for a bit. So I have a feeling that Roku knows how to handle those emotional roller coasters. 9 says, do you like the strat of putting TFSA income into an RRSP, increase my TFSA contribution for the next year, and get a bigger tax refund? To me, this is a very individual question. So, what 9 is talking about is basically, you're taking your dividends out of your TFSA and you're just moving them over to your RRSP. So what you're doing is you're getting back, first of all, the dividends that you take out. So let's say you made $1,000 in that year in dividends. That means you've taken that $1,000 and you put it into your RRSP. So you've now got a $1,000 tax break, and you get that $1,000 room back next year. So if this was this year, that means instead of the $7,000, and that's what you're getting this year, guys, in case I haven't mentioned that, the $7,000 room that you're getting in January, you get $8,000. You get an extra $1,000 because you're getting your room back. So that's always fantastic. Always keep that in mind. That in January, anything you pull out of your TFSA, you do get the contribution room back. That's kind of huge. RRSP, you don't. So if you pull something out of your RRSP, not only is it taxable 100%, you also lose that space forever. So always something to keep in mind. So in this case here, you're getting your space back. You're creating a tax. You're kind of creating a tax shelter in a way. The answer, to me, what the answer would be is if you need that tax, if you need your taxes to come down, like if you're in a higher tax bracket and you want to pull that down, then that probably does make sense. So yeah, if you're in a higher tax bracket, for sure. If you're in a very low tax bracket, it probably doesn't make much of a difference. Because keep in mind, and here's an interesting thing. If you're a young investor and you don't make a lot of money and you're in pretty much that almost the lowest tax bracket out there, putting money into your RRSP could actually work against you. And what I mean by that is, as you get deeper and deeper into your life and you start making more and more money, if you get to a point when you do retire that, you've got pensions and you've got a really nice CPP, and you could potentially get to a point where you could still end up in a higher tax bracket than when you had just begun in the working field. If you had been at that very bottom, my mouth is like all froggy here. There we go. So if you're at that very bottom, you could get to a point where you actually are paying more taxes on those initial contributions. So you always kind of want to keep things in mind. So I like to say, if you're new to investing, don't even think about your RRSP. Get that TFSA filled first. Then by the time you've got that maxed and you're at the point that you're simply just adding each year to your new contribution, then you can start thinking more about that RRSP, because then hopefully you're making a bit more money. The one exception, though, to that rule is if you have a job. So let's say you just started the workforce and you landed a doozy of a job that does RRSP matching. If your job does an RRSP match, you 100% want to max that match out. So if they say we'll match up to $100 a year or up to $500 a year, well, you want to make sure you're putting that $500 in, because then they're going to match it. So you're basically just doubling your money. So you always want to take full advantage of any kind of matching program of that nature. All right, let's see here. Anyone hold HPYT? All right, let's take a look here. HPYT. So this is the Harvest Premium Yield Treasury. I have a feeling that I don't know if anybody holds it. I was thinking 9, but I know 9 holds US. So this is not US, so it's not 9. Once again, we'll take a look here. So this here is a treasury bond. Right now it is currently coming down. And that's what happens. The value on bonds, they have an inverse relationship to your interest rate. So when interest rates are going down, bonds tend to go up. But in this case here, and this is kind of an interesting thing, we've had interest rates going down, but these these are still going down too. So it's almost like it's not working in the same direction. But you got to keep in mind too that this here is an ETF. So one of the things are when you're looking at bonds. So for example, short-term bonds, they are less impacted by rate changes than long-term bonds. So a lot of times these ETFs will have a lot of short-term in there just because of that stability it adds to it. So, this is kind of an interesting one. I'm not crazy about bonds myself. I feel a sneeze coming on. Now, if you say the words pineapple, let's see if it worked. Somebody once told me, they said, say pineapple and a sneeze will go away. But I still feel like it's there. But we'll try. We'll try to not sneeze. I don't want to sneeze on air. All right. Right. And we got to the REI. All right, we got to that. Okay. Berger says thoughts on the New York Stock Exchange changing to a 22-hour market trading time. Is this really? This is the first I've heard of this. Oh my God. How did I miss this? That's crazy. That's crazy. It'll certainly, if the New York Stock Exchange goes to 22 hours, that could very well change everything. I'm digesting it. Holy cow. That could be very interesting because, if they follow, I can see a lot of other markets following suit, maybe even the TSX, who knows? That would be very, very interesting. I don't know if I don't know if I like it because the market close is going to be pretty late. We would do more of if the TSX went to 22 hours, we would turn the market close into something else, like maybe a market something. But wow, that's interesting. I have not heard of that. I have got to look. I now have to look into that. Holy cow. All right. What do you think on CSTM, which just reported earnings that drop and it looks to be rebounding? CSTM, let's take a look. All right, so that there is a Constellium SE. Let's see here. All right, I will admit I have never looked at this company before. All right, so yeah, I can see the drop, and it looks like there's a little bit of well, that's during the opening hours, so this doesn't have after hours. Let's actually go over to CS. All right, let's add it here. CSTM. All right, boom. All right, we got it. We got after hours on this one. All right, so here we are. Where? Oh, there's let me see here. We might be are we past? No, we should still have active hours on here. I'm just looking for it. For some reason, I'm not seeing after hours on this one at all. So just give you guys a general idea. And like normally, and it might just be what the stock is. Like normally, if you take a stock, like we'll grab NVIDIA here. Normally in NVIDIA, you'll see we got that post right here. So right now they're sitting at 141.46, which is exactly where they closed. So they have not moved at all in the after hours. Tesla, for example. So right now in the after hours on Tesla, they're coming in here at 268.71. So yeah, they're but yeah, normally I do get an after hours on it, but whatever reason, getting back down here, CSTM, I am not getting anything. I got their final thing in here, but nothing's moved on them. It might be just the company, but you did say their earnings were bad. Let's see here. Yeah, they were pretty bad. Oh, look at this, 120%. That's a big surprise down. Yeah, that definitely explains why they went down pretty far. But here is that recovery. So maybe this is what you're talking about, how they came down, they recovered a little bit. Yeah. Let's go back here. Just give me a second. We're going to go back here and take a gander at their data here. Oh, wow. I got nothing. I got nothing on them. And that's because it's sometimes a small U.S. stock. I get nothing. But let's head over here and we'll put them in. See if I can get some data out of Yahoo on them. All right, here we go. And I'm interested in their statistics. Let's go into their statistics. All right, we got a little bit of information here. So debt, there we go. Yeah, 198.70% debt to equity. That's a lot of debt. A lot of debt for a small company, for sure. What do we got here for? Well, the return on equity is not bad, 11.14. But I would be a little bit concerned with the debt, just a little bit. I'd like to see them start to pay some of that down if possible. Now, they are profitable at the moment, so that's not too shabby. But, you know, they definitely suffered from missing their earnings, and they did miss them big time. So this is another one of those stocks where, you know, it's not a penny stock or anything, but I would certainly pay attention to see what's happening. Make sure we get some movement back. Now, I do like the fact that they did bounce back a little bit. That's certainly good. That's definitely good. All right. I'm still thinking about that 22-hour market. Oh, boy. Ryan says, what do you think about ZID? I just bought into it yesterday. I'm already down, but I hope you think it's temporary. I'm willing to stick it out. Yeah, I do like ZID. Let's pull this up here. So this here is an India ETF. All right. All right. And all right, here we go. And it's actually interesting. I've been wanting to do a deep dive on this one for a long time, but it just never happens. It gets into the vote. It just can't win. It just can't win. I don't know. I don't know why. But yeah, so you bought in. It's come down a little bit. Hold on. Where's my... There we go. My mouse had disappeared on me for a second. All right. I just want... Come on, guys. Load up the information a little bit faster, please. They went and did this big change on their website, so it's kind of annoying me. All right, fine. The information I'm looking for is over here anyway. Let's come in here. All right. Okay. Oh, they're annual. Okay, perfect. I just wanted to make sure it wasn't a... Let me pull back. I wanted to make sure that it wasn't a situation where we had a ex-dividend day come in to influence it. But let's go back out. Let's back out to the 1 year. Look at this. They've had a lot. They've been doing really, really well. We got a little bit of a correction going on. No doubt about it. However, India right now is the #1 growing economy in the world. They're not the #1 economy. That's the United States. Number 2 is China, but they're the fastest growing economy. So there's a lot of reasons for that. One, they actually passed China and became the most populous country in the world. So that's huge. That's huge. They're also gearing. China right now, a lot of people are trying to move out of China. They're like, we're looking for another cheaper option. And India is stepping in to fill that role. So there's a lot of emphasis right now in India on growing and creating the infrastructure to keep that momentum going. With that being said, this here is more the norm. This is a little bit of a correction, but I think you're fine. This could be an opportunity just to get some more. Like if you're dollar cost averaging, I think it'll be an opportunity that you can basically average down a little bit. I do think it will recover. I don't think you need to sort of jump ship on this one at all. I think you'll be fine. I think you will be. All right. Vic says, I hope the NYSE has equitable hours so we can all trade and not just big players in pre-post market. Yeah, I mean, if they go to 22 hours, my thoughts are that, it should be for everyone, retail as well as institutional. Let's see. 9 says, I want to build up my RRSP as well. Okay, then yeah, absolutely. Then there's nothing wrong with that strategy at all. Let's see. Roku says, except when the companies you work for have RRSP contribution matching. Exactly. That's what I was saying. That's funny. All right. 9 says, yes, TFSA and FHSA is maxed for me, so only RRSP left for regular account. Oh, yeah, absolutely. All right. Sarah's abstract boyfriend says, because of what I've learned from you, I've been putting my inheritance in my TFSA and high interest savings on Coho as I'm currently unemployed. Okay. All right. Fair enough. Yeah. I mean, here's the thing. If you're sitting on an inheritance, I've seen this before. I've seen, I knew somebody who got an inheritance because somebody unfortunately had passed. And it was a fairly large inheritance. They could have easily taken that money and they could have invested it, and they could have even created an income from it that could have kept them going for a long time. But you know what they did? They didn't invest it. They just put it in their savings, and they decided to just spend like crazy. I watched somebody who had like $500,000 in their account. You know, all of a sudden they're down to 300,000, 200,000, 100,000. Last I checked, this person is now looking for work because they spent the whole thing like absolutely crazy like. So yeah, I mean, there's no reason for that. So with that being said, learning how to use learning how to use your accounts, learning how to actually get some interest on what you do have, it makes a lot of sense. Obviously, you don't want to go into the stock market and just say, okay, I've got $500,000. I'm just going to randomly pick 5 stocks and put $100,000 on them each. Now, you still want to be careful. You still want to take your time, do your due diligence, figure out which stocks you have higher confidence in. Which stocks, even if the market goes into a bear market, which stocks are going to be fine on the other side of that? That's where blue chip really come in. I did a video once on, I think it was called Circle Your Wagon, Blue Chip, Hold Forever Stock, something of that nature. And there's nothing wrong with those. Like it's very attractive to look at the higher, some of the high covered calls and say, okay, well, I'll just put all my money into like HYLD. Fantastic. You'll make a good amount of income from it, but if we go into a bear market, we've already seen that HYLD does not respond very well going into a bear market. And part of it is because it does use leverage. So it does fall faster. So that's where you want to be a little bit smart. So, for example, if you were investing in something like HYLD or ENCL or, anything that has leverage in it, if you see a bad market condition starting to come, that's when you want to sit back and say, maybe it's time to get out of those and maybe look for something that's more recession proof, whether it be something like one of the railroads, or maybe it's something like a Dollarama or something like that. There's a lot of recession proof stocks out there. So you want to be really smart about it because, if you're smart and you've got an inheritance and, whether you're unemployed or not, you can use that. You can use that in a more smart way. So one, if you are pulling money out, like to survive, pay rent, things like that, at least the rest of the money is making up some of that money. So, if let's say you make, let's say you set it up and you're making $30,000 a year in dividends, you might be able to live off of that depending on, maybe, well, perhaps not so much anymore with inflation, but you can at least limit and minimize how much money is flowing out because you're generating extra money to sort of help you over everything. All right. Whew. 9 says, I hold HBND for covered call fixed income. I hold the low fee U.S. Treasury duration ETF and the RRSP. Yes. I know about the U.S. one for sure. Okay, so it's not retail getting that 22-hour access. Oh, is that going to be like 22-hour access of like after calls? Very, very interesting. So if that's the case, then retail may not get any more than we already have, but we can dream. We can dream. Like, it's funny. Like when you look at something like commodities or crypto and, it's like, why can't we have 24-hour? But at the same time, Isn't it nice to not have to worry about the market on the weekend? Isn't it nice to not have to worry about the market at night or during supper, or, you don't, it's like, hold my chicken leg. I got to go have I got a trade I got to check on. Yeah, it's nice to not have to do that for sure. Andrew says, for a person that can easily find companies that consistently go up in value, is it better to pull from dividends or capital gains in a cash taxable account? All right. So, here's the thing. If you're pulling from the dividends, so I'm assuming in this case here, we're talking about a non-registered account. So the dividends are just dumping in anyway. You're going to get taxed on them no matter what. So obviously, yeah, those would be the first ones I would take if I needed cash. I would take those for sure. Capital gains would be kind of my secondary because I don't have to. I don't have to pay any tax on them unless I realize them. So why would I realize them unless it was a necessary? So yeah, I would take the dividends first if you're pulling from the account. So pull from the dividends. Then when you've used them up, because it doesn't matter. You're getting taxed on them one way or the other. It does not matter. But the capital gains, you're only getting taxed if you pull them out. And there's ways that you can try to minimize that. So for example, tax loss harvesting, you can use that to help you minimize some of those capital gains. So yeah, dividends, then capital gains. All right. Let's see. Sarah's abstract boyfriend says, I literally just sat on it for almost a year before I came to my senses. Okay, so basically 300K just sitting there. That's, I would never cry over lost milk or spilt milk or, but yeah, now that you know, it's time to sort of figure it out a little bit. Figure how you can invest it. Figure how you can make that money work for you. That's kind of a big thing. And I don't know how old you are, but, because, the older you are, the more room you're going to have in your TFSA. Whereas if you're very young, you may not have a lot of room, but you definitely want to have that maxed out for sure and have it working for you. Have it building you some income. All right. Sarah says, luckily I'm cheap. Yeah. I understand that. I understand that as well. Andrew says, I'm still learning how to invest the best, and I'm thinking circle the wagon with high market cap cager returns would be the best place to invest, even though they have a bit lower dividend yields. Yeah, absolutely. Well, you got to keep in mind too, when you're looking at a lot of these circle the wagon stocks, yes, they have lower dividends, but they also tend to come with a certain amount of growth. So you are looking at some half decent total returns in many cases. So I mentioned, let's look at CP. We'll go to CP. I always go to CNR. Let's go to CP this time. All right, we're going to bring up CP and we'll look at the 1 year. All right, so here's the thing. If you had been sitting on this for a year, that stock, it's gone up from 98 to 107. So, all right, so you got about $10 in just growth there. That's in addition to the dividend. Oh my gosh. Oh, come on, guys. I feel like TMX might have sold out to ads. Come on, where is my data? Holy banana bread. All right, well, here it is now. All right, so you'll look at their yield. It's not big, 0.699. So you're getting a little bit of a yield, but that their growth is kind of where you're going. And if we look at CNR, I think it's a little bit better here. All right, CNR, might as well. We're looking at both. Now CNR, that's a 5-day. Don't mind that 5-day. And you look at CNR, once again, you're going from 146 to 154. So both the same amount on the share. So both of them, you've made about $10 on the share price. But with CNR, you get a better dividend. So you're getting 2.202%. It all adds up. And sometimes, if we didn't have a lot of the issues, like, for example, strikes, forest fires, this would be a completely different story. This number would be much, much higher. You know what? Oh, let's give you one more. Andrew. Let's go to Dollarama. All right, so if we go to Dollarama in the 1 year, This is another story altogether. Look at this. 94 to 141. So for every share, you're pretty much making almost 50 bucks, almost 50 bucks. And in this case here, you're getting a small dividend, 0.257. So you're not getting a great dividend, but you're getting this you're getting this growth. You're getting this big growth curve plus that dividend. It all adds up into a pretty good looking total return. So that's one of the things that you are getting. And when you take a look at a total return like that, if you get a total return in the 20%, it blows away a lot of covered calls, depending on the situation. Like right now, for example, if we go to HYLD, whoops, right here, we'll pull this up. What you're going to see with HYLD is that they have had a pretty good year. So, they started the year down at $11. So in this case here, you've added about $3. You've added about $3 a share, but you're getting this big dividend at the same time. So it's pretty comparable right now. But, and I was kind of mentioning this before, if we go back to the 5-year, you can sort of see here, when they opened this just as the bear market was coming in. So here's the bear market, and they have leverage on this one, so it hurt them big time. But they have, and this is where I give this ETF a lot of credit. They fought back. They did, and they've managed to crawl back. Now, they're not going to get back up to this level. And it's not because of leverage. It's because as they are climbing back up, the covered calls, you do lose some of that upside potential. So basically, the first covered call that they hit the strike price, oh, there's as high as they're going to go. Oh, they hit the strike price again. Oh, they can only go that high. The next, oh, they hit the strike price again. And you see it starts to go down and down. That's just kind of the way it works because you're losing some of that potential because it rose a bit too fast. So just something to keep in mind. All right. We got Panama Jack. Here we go. I got 20 shares of NVIDIA at DPC average 115, and I'm up 27%. Plan to hold long term. Nice. It's also in your HYSA. So HYSA, guys, let's just show you what that one is. Here we go. So this here is the Bond Blocks USD High Yield Bond Sector Rotation ETF. Try to say that 3 times fast. And we'll come back we're going to come over here just to the 1 year. And you can see, they've been doing pretty good. And you'll notice here that, they have high yield bonds, but it's an ETF. I'd have to look. Like, I have not looked at this ETF before. But now Panama Jack says that they do have exposure to NVIDIA in there. Interesting. Yeah. I'm okay with that. It's not bad. I mean, I like the looks of this one a little bit better for sure. But NVIDIA, let's go to NVIDIA. Why not? We're here, right? All right. We don't want that one. All right. NVIDIA is one of these ones that, you gotta look like, if only we'd all gotten in a year ago on NVIDIA. Look at this, $41 to $141. So you're looking at $100 a share. Let that sink in. $100 a share you could have made. Their dividend yield is incredibly small. They actually only just recently added that dividend too when they did their split, because they used to be much higher, more expensive than this. I think it was a 4-to-1 split. Yeah, the dividend yield, it's basically, it's not much. Basically, you're getting one US penny. So you're getting a Lincoln, I guess we could call it. You're getting a Lincoln for every one of those. But, I mean, you just look at this growth. And for people who think the AI craze is over, I don't agree with you. Am I wrong? I hope not. But I just don't agree. I think there's still a lot more runway for NVIDIA. And I will say, we actually, we live streamed the... when NVIDIA did their last earnings call, and we had that big drop. And I warned people then. I was like, look, guys, this didn't go great. And I know there was a lot of people in the community that were invested in it. And I was like, hold on, it's going to get back up there. Just hold on. I know at least one person who didn't. I feel bad for them. But those of you who held on, because a lot of people had bought in around, around the 130 mark. You're all in green right now. You're all totally in the green. And it wasn't even a long wait for it to get back to that green. So for those of you who did listen and held on, thank you for doing that, because I hate to see people lose. I hate to, especially this community. I don't want to see any of you guys lose anything. So, all right. And Sarah's abstract boyfriend says, I'm just getting started and almost 40. Okay. Better late than never, though. I heard the second best time is now, as they say. Yeah, absolutely. Like, the best time to invest is yesterday. Second best time is now. You are 100% right. Well, I'm glad that you found investing. And a lot of people have no clue in their 20s or even their 30s about investing. Usually it's, a lot of people do come this way in their 40s and some in their 50s. And I've actually run into people in here who's like, hey, I'm 60, I'm about to retire, I've never invested, what do I do? Help me. And I'm glad. 40, you've got time. You got time to sort of build things out. And you got that nice, having an inheritance of almost 300,000, that's a nice nest egg to get yourself going. Now, hopefully you can find a job as well, because then you can start pumping even more money into your investing journey as well. So nothing wrong with that. Vic says, marital breakup, 300K house after fees, split 50-50, and I'm swing trading my half. Yeah. Vic has made some really good trades, though. I will say this. Vic has made some very, very good trades in there. I've heard of some trades that weren't good, but I've heard of a lot of good ones. I think Vic is on the right road with his truck. His big truck. For those of you who don't know, Vic drives I think it's 18 wheels. I don't know if it's 18 wheels, but it's a big truck. It's a big truck. Sarah's abstract boyfriend says, "You got brass ones, Vic. I really hope it works out for you." Absolutely, I'm hoping so too. All right, guys. I think we're there. I think it's time to get to get into the weekend. But before we do, we can't get into the weekend with me on a little screen. That just won't do. Let's just see here. All right. Main screen. There we go. Main screen. And we got this from JJ. I'm in the process of launching my own YouTube channel, just figuring out some details. Awesome. Now we can have a contest. It'll be a Vineet versus JJ. We'll see. Actually, we shouldn't have a contest, because it's one of the things is that sometimes you'll find a channel the same size as you, and you're like, okay, let's see if I can beat them. And then all of a sudden they blow up, and you're like, oh, darn. It happens. Or sometimes you're the one that blows up and leaves them in the dust type thing as well. So I always look at it this way. We're a community. JJ will be under our wings, and Vineet will be under our wings in this community. So there should be a good amount of cross-pollination for you guys, because you're going to both be making videos on that same thing. So I think it'll be... I can't wait, actually. I'm looking forward to seeing what you have, and I can't wait to see some more from Vineet at the same thing. All right. Of course, as I'm on my way out, I start getting some more stuff, but that's fine. Panama Jack says, I didn't know anything about NVIDIA last year, and I'm new to investing since April of this year. Okay. Well, congratulations on finding investing. So definitely good. Tiny hiccup there. Oh boy. Yeah, it's great to see that you found it. I think that there's a little bit of something in investing for everyone. So it's gonna be you guys are going to be collaborating on lives. Why not? So let's hope for double engine growth. It depends. You provide. Here's the thing. With YouTube, if you provide a good product and you provide that consistency, then the people will come. You're going to grow. Either you're going to grow slow and steady. That's kind of the growth chart of my channel. Or maybe you will explode. It's hard to say. some people explode and go crazy, like immediately out of the gate. You never know. You never know what you're going to be. Hey, if you explode and go crazy right out of the gate, don't forget us little people back here who are just, growing nice and slow, but nice and steady. Although this has been, like I said, a fantastic month. Speaking of that, be sure, guys, to hit that like button on the way out. Just to get a little bit more bandwidth here from the algorithm, so it pushes it all out. All right, I will be back. By the way, I will be back on the air on Sunday. We've got this week lots of great news in there. In addition to that, if you haven't seen the RioCan video that we dropped today, be sure to check that one out and give it a good old like, and hopefully you do like it. I think it's a lot of great information in there. And the channel members right now are voting on Tuesday's video, so I have to script it tomorrow. So they have one more day. So if you are a channel member and you have not yet voted on tomorrow's on the channel, on the members choice video for the end of the month, get that vote in right away on the community tab. Just head over, and that's pretty much all I can ask for. All right, and finally, we'll go with this as our final comment of the night. Sarah's Abstract Boyfriend says, best advice for growth in YouTube is don't make videos that age like milk. Provide value that stands the rest of time. Yeah, absolutely. Evergreen content is great. Now, I will mention in this niche, a lot of content it can't be evergreen. For example, if I do a deep dive on Scotiabank tomorrow, 5 years from now, that deep dive is kind of irrelevant. Although it actually is funny. I have had this happen where somebody will go to a deep dive from 3 years ago or a list video from 3 years ago, and then they'll leave a comment saying, I don't see these numbers. Where are you getting these numbers from? I'll reply to them, did you notice this is a 3-year-old video? So, it's just one of those things. It happens. But anyway, guys, enjoy the weekend. Have fun. I will see you here on Sunday. It's going to be great. Until then, take care, everyone. And, see you Sunday. Bye.